Good afternoon. First of all, let me alert you there may be interruptions in the audio because there's light out in my area, and then there's a lot of noise going on in the room right now because there are some activities going on, and also outside here some people are playing, some people are calling names. I'm living in a compound house, so there's nothing I can do about that right now, but I've fine-tuned the microphone to a noise cancellation mode, and I hope it delivers as I'm expecting. So I'm seated outside. Um, yeah, I'm seated outside. I don't have to see the exact place I'm seated, but yeah, I'm just seated outside. Last week we talked about the interbank price delivery algorithm and how we can use the framework of that to increase our anticipatory skills in terms of reading price or reading the price of the assets you are trading in the market. It could be gold, sorry, it could be metals, commodities like oil, like uh, raw materials like I'm not not raw materials, but livestock like cow, sheep, and all these things. And also, it could be currency pairs. It could be digital currency like Bitcoin, Ethereum, and all these other amazing things that are emerging now and are making people a lot of money. So I wanted to move on to the next topic, which is equilibrium versus discounts. But then most people texted me privately to ask me about the session we did last week. How can they identify equilibrium points in price, and how can they know whether that point is going to hold? Because honestly, not honestly, but then because it's something that exists, so I can't say honestly. You get it, but there are certain points in price that don't necessarily come all the way down to the 50% level as we spoke about, but it doesn't mean the concepts are invalid. Just means the market conditions are changing, and hence we have to tweak tweak our strategy or our concepts to adjust to the market. You see, market is on its own. It's not a strategy that or a concept that makes the market. Shit, I spoiled this thing yesterday. I spoiled this thing yesterday. Oh my god. Indomie. So yeah, market exists on its own. It's not a strategy or a concept that um make the market, but then it's the market that make our strategy and our concept. So if today the market is changing direction to a certain direction, we have to adjust our concepts so that it can accommodate. Wow, what what a is our price is just reversing on my distance. Let me see what is reversing to. I'm in a trade, guys, so I'm monitoring it. I entered somewhere around here. Yes. So yeah, if you watch my WhatsApp status, you see that I posted it, and then I'm waiting for it to get to, yeah, for it to get to my TP. But let's move on. No, don't open, don't open. Okay, so we are going to you're running away. We are going to have to tweak our, our concepts. So what you are seeing me do right now is not i- there are things traders go through when their trades are open, you understand? We don't know exactly what markets is going to do. So when we open trades, we monitor them, and then monitoring them, sometimes you know that your money is behind the market. You see, you know that the market is doing something that does not favor your money. So sometimes you are behind the chart, and then you try to shake it off, but sometimes it's not shaking off. You just have to trust that your plan will play out, and then you leave the price to do what it has to do. Because really and truly, we don't control price. The people who make this market are the ones who control price. So when they say price is going to do this, it does that. When they say price is going to do this, it does that. So yeah, I was speaking about back to what I was speaking about how we have to tweak our concepts or our strategies to fit what price is doing currently. You get what I'm trying to say? So yes. So this particular session is going to talk about what traders should focus on right now, and for those who are in the community, those who are in the community and are die-hard followers of the video. I don't know what other way to use. That's why I'm saying die-hard. So those who are in the community and are die-hard followers of the sessions we are having would know that what we are doing here now is a process. You see, it's a process. That's why we are going through it stage by stage. I'm not just going through it and say, okay, today we are going to place a trade. I will not dare do that if you have not gone through any of these things. And before I select people to trade with, I'm going to make sure you have gone through the concept and you understand what I'm saying or I'm doing. Or else we are not going to trade together. I'm just going to trade on my own, and then wait until you catch up before we continue we do any kind of trading together. So that will be it, and then let's get straight into it. So what should traders focus on? Traders should focus on the fact that market is not booked by humans. You understand? I mentioned that in my previous session or in the previous session, and I was stating that there's an algorithm that books price. There's an algorithm that makes sure every order that enters the market is booked. Understanding humans have long switched from the fact that another human should be booking their price. Why? Because it tends to be a slow booking. Gone are the days where when you want to place a trade, you have to call the uh, electronic something, that we call them something, but for completeness sake, I'm going to use broker. But in the past, they used to call them electronic something. You call them on the phone, and then you give them your order, and you give them the specific level you want to place your order at. So when you give them those levels, what they then do is that they input it into the market, and then they place your order for you. And then they tell you they've placed your order. So you'll be there waiting, and then waiting on what price is going to do, and this and that and this and that. But we've moved on from that. We've moved on to a technological world, and as you know, technology is still consuming the world right now. Not just technology, both science and technology. You get it? So trading had to not trading had to evolve uh, from the past environment it was into the future, which is technology. Understand? Technology is the future. Technology is going to continue being the future. Understand? So what did trading evolve into? Trading evolved into the fact that humans are the ones who built oh sorry, humans are the ones who inputted your trade for you into algorithms out AI, and algorithms are the ones who input your trade for you. So now what you do is you just go onto your broker, you input the order, and then they have systems, they have algorithms built in to the broker and into your trading terminal that quickly send your order to the broker, and then they fill it for you. Understand? So yes, this algorithm designed has limited things it can do. And then I was saying that earlier. I was saying that uh, on our previous session, that the elements of a trade setup, that the algorithm has only four things it can do. That's consolidation, expansion, retracement, and then reversal. And then from these four things, it's interchanged. Sometimes it always starts from a consolidation, bear in mind. So consolidation, after a consolidation, then it can go to expansion. So it's always consolidation, then expansion. It doesn't start consolidation reversal. It doesn't start consolidation retracement. What is it going to retrace into? For retracement to happen, it means there has been an expansion. You understand? There has been a price move from a certain level to a certain level. Retracement simply means you are tracking back your steps. You understand? You are taking back your steps. You are going back to an example is, when you were small, sometimes your parents send you and then you misplace the money because you want to play. You are so focused on playing that you don't realize that what you are holding in your hand is well, it's paper actually, but it has value. It's not like the normal paper. And then you leave it on the floor. So when you leave it on the floor, what you normally do is you retrace your steps. You measure the distance from the house to where you are currently, and then you go back, and when you are going back you start looking on the floor to see at which point do you think the money, or at which point do you think you stopped or you played or you lose focus of what was in your hand and threw away. You understand? So you go back, you look on the floor, you look on the floor until you find that money, and sometimes you don't find the money actually. So what happens is that price consolidates, it expands. That's what it does. It consolidates, expands. So when you are looking at price, you look at price at where it is currently, and you look at what it's doing. You understand? And where it came from. So when you are looking at price, like what I'm looking at right now, I'll show you something beautiful right now. This is a consolidation. You get it? This is a consolidation. And at this point, price had not expanded yet. You can also bring it back here. You can say, okay, this was our consolidation before this expansion. You understand? This was our consolidation this expansion, before this expansion happened. You understand? And then where do you see the price return to? It returns to the order block around or at the 50% level. Let me use this. Yes. Yes, so at or around the 50% level. So you see that at or around the 50% level, price was reacting to that level. It didn't want to go further down because the algorithm is designed in a specific manner. There are specific things the algorithm can do. You understand? So it got to this level and then what started going up, going up, going up. Now our consolidation expanded to this level because it's still in a range. It's not showing clear signs. Yes, it went up, but immediately it came down. It should have continued going up by continued consolidating. So what do? We extend our Fibonacci to the highest point of it. Understand? And say, okay, this is our complete consolidation range. Now, what do you see? You see that at the 50% level, price didn't agree to go below that level and close. It hit that level, and then what did they do? Immediately started showing what? A reaction. I don't like the way this trade is moving at all. So this was where price got to before doing its thing. This was where price got to before going up. So that'll be 300 pips at this level, but the target is supposed to get here. You understand? That's like 700 pips. But I entered that around here, and price is playing around where I entered at, and I don't like it, really and truly. Anyway, let me maintain my composure. I'm wondering what it would look like when I watch these videos in 3 years to come, or 4 or 5 years, or even 10 years to come. You understand? I, yeah, I'm not going to say what came to mind, but I'm wondering what it's going to look like. I would have evolved from the trader who will panic when he sees price coming back to his level into the trader who just sees that, okay, I'm following my plan. Yes, I'm following my plan now, but it's hard to follow the plan because I'm new to it. Not like really, really new, but I'm now new to following a plan. Gone are the days where I just place a trade and then boom, I just wait for price to do what it has to do. You understand? But now I have a plan and then I'm following the plan. You understand? And then following the plan doesn't look right. Following the plan doesn't look like the trade is going to play out. Why? Because sometimes, like what the trade is doing right now, see what it's doing. Let me turn on my phone and do the phone mirroring so that you see. Come on now, dog. Come on, man. This time to connect. That's right. Oh, ah, I should be vigilant of this next time. So yes, as you can see, well, I wish I could have covered this and not. Hey, today will be my hardest recording on, because the conditions I'm facing outside here, I don't like them, but I can't say anything about it. So trade is getting to the level I place my trade at. But yeah, no panic, no panic. So yeah, price gets to the 50% level over here, and then it starts rallying upwards. And the rally upwards should show you that there's an intended level or there's an intended direction the market makers are trying to take the markets to. You understand? So they get to this level and then they start spooling price upwards. You understand? I don't have better words right now. I promise I'm going to get better in my vocabulary. But you see lethargic price moves, you understand? Huge, massive moves. You see, not like these short ones, like these small, blue candles. No, you see massive price move, boom, boom. Then you see it starts going up like over here. So seeing this would have given me a notification that okay, market makers are trying to do what are trying to send price higher. They are trying to send price higher. So we come here, you can see our 50 level, price came down and then what? It went up. Now the consolidation turned into an expansion. You see, no, let me leave it. No, yes, the consolidation turned into an expansion. Now, expansion simply the reflection of expansion over here is that price broke out of the consolidation phase. You understand? It broke out of the consolidation phase, broke out of the consolidation phase. And what did price do after breaking out of the consolidation? It retraced. So let's come to the 1 hour time frame. You see, so what was price doing was retracing its step. Now, why does it have to retrace? It has to visit a certain institutional reference point in price. Now, the concepts we use believe that before price expands, it leaves a reference point in the consolidation phase where it revisits to mitigate all the orders it, it had placed in that level. You understand? So what we use as the reference point in price now is what? The order block. The order block that was residing, or the order block that resides around the 50% level in the consolidation phase. You see? So yes, let's go to the 4 hour time frame to see it better. So this is another block. You can use this too, but on this particular day there was news events. That's why you see wicks. Normally there was no news events. Price would have just come, touch this level, the top, reach here, and by far would reach somewhere here where these red candles are, somewhere here, and then continue going upwards. But then it got to this point, even came further down and then went back upwards. You understand? So that's what we focus on. consolidation and then expansion. I'm redoing this session because a lot of people ask me, and including people who are not in the community. I don't know their preference, but they prefer not to be in the community. Understand? It moves upwards. Sorry, it expands out of the zone, and it's not every day that it expands upwards. Sometimes it expands lower. Understand? Sometimes that lower expansion is a manipulation, manipulating traders because they know that if they expand lower or if they expand upwards, you get the indication that they are going to what? Try to reprice price to a higher level. So what they do normally is they expand price upwards out of that level, and then they reverse. They pick out all the orders over here and then they reverse. You understand? And then all the traders who took a trade outside this consolidation range will do what? Will hit stop loss. You get what I'm trying to say? Yeah. Guys, sorry for the distraction. I injured myself some time ago and then it's spinning me. Charlie, I'm tired. I'm tired of. So yeah, after the expansion, then wait for retracement and sometimes reversal. So after the expansion, sometimes reversal happens, sometimes retracement happens, sometimes we go back to a phase of consolidation again. You get what I'm trying to say? So yes, let's look at cases where let's look at cases where hmm, there's a B, there's 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 a B with that they are stinging thing. See, or more. See the things I'm having to do for trading lah. What the hell? So yes, what was I saying? The things you should focus on. You should focus on the price. That price is what is booked by is booked by an algorithm now. And then what your focus should be on is how do you navigate your way into finding a direction for price, and how do you join the big the big industry players to how do I put this now? How do you join the big industry players to um how do you join the big industry players to, I don't know why the word is not coming, but to ride on their trend? You understand? I was looking for a specific word, but I was not coming. So to ride on their trend, how do you join the big industry players to ride on their trend? How do you see where they are trying to reprice price to? And how do you join the repricing of price to your intended level? Understand? So that's what we are about to focus on now. This trade would have given me what if I took boy. So let's continue. Now I'm going to show you how to spot the consolidation phase and then know the exact time price is going to react to the 50% level and times where they are not going to react to the 50% level. So this is it. This is a consolidation phase you are looking at. You understand? It's a consolidation phase you are looking at. And what do we see happen? Yeah, you can see that price was consolidating in this phase, up, down, up, down, up, down, up, down, up, down, up, down, up, down. And then at this particular point, let me zoom in. At this particular point, we can see that price hit the 50% level and then showed signs of wanting to go above what? It didn't break above this level. Understand? So the point where you know expansion is going to happen is when it closes as a bullish candle and then you start seeing consecutive bullish engulfing candles like this. Understand? Like this. But if you want to be an early trader, what you can do is you take your trade here and then put your stop loss below a low. Mostly it's below a low. Now mostly price comes back down to take out this low. That's why you have to watch. You have to wait. There are ways you can you can spot whether the consolidation, there are ways you can know whether the consolidation is going to continue consolidating or it's going to move sharply away from that spot, you understand? And then all comes from the higher time frame bias, the higher time frame direction. So everything I'm doing on here is based off of a higher time frame price action. You get what I'm trying to say? So yes, let's get into it. This consolidation phase, we saw price hit here and then what? Sharp rejection. So already what are we thinking? We are thinking price is likely going to reprice higher. It's not going to continue going down. If it to continue going down, we don't expect to see sharp reactions off of the 50% level, you understand? But what happened? Price went up, came down, came down, came down again, and then continued going up. Now, when it continued going up, it showed a sharp rejection here. Pump went up again over here. Pump it went up. Then what did you start seeing? You started seeing showing more blue candles after this point. So blue, 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 blue. Then what happened? We saw price expand out of this level. Now, if you didn't have the heart to take your trade over here, what you can do is and go on the lower time frame. Mostly you will find I'm not going to go on the lower time frame by the way. You can go on the lower time frame and then you find short retracements in price, specifically the 15 minutes time frame. The 15 minutes time frame is ideal to be finding re-entries. Now what I mean by re-entry is that most time, okay, let me just go to the 15 minutes time frame. So you can see when it expanded, this is a retracement, it's a short retracement. So re-entry. So in case you entered here and you want to re-enter, you enter at somewhere here. Then it went up again, a short retracement here, even here, re-entry. A short retracement here too, re-entry, understand. But on the 4 hour time frame, it looks like consecutive up close candles. You see that, right? Exactly. So if you don't catch this, you wait. Now, what point do we uh what point do we what point do we re-enter price with the mindset or the idea that it's going to go it's going to continue going up? It is when price retraces back to our 50% level. You understand? The other block that was found at our 50% level in the consolidation phase. So over here you can see that price was going up, going up, going up, and then for the uninformed person or the uninformed man, what they normally do is when they see price going up, they say, okay, price is going to continue going up. Why? Because it's going up already. They want to chase price at higher prices. That's not how it works. You don't chase price at higher prices. You wait for them to reprice, for price to come to an efficient pricing level. You understand? It comes to always comes to an efficient pricing level. What we mean by that is that it always comes back at or below. Let me show you what that means so that nobody is confused. You see, it always comes to the 50% level, it always comes to the equilibrium of the price swing, you understand? So when it comes to the 50% level, we already know that okay, we are looking for we already know that we are looking for higher prices. So when it gets to the 50% level, we start looking for bullish scenarios that are going to take us bullish. You understand? We start looking for price action that is going to make sure our price goes upwards. You understand? So now, how do we know that it's going to continue going upward? I'll teach that in the equilibrium versus discount. I don't want to overload you with information now, but there's a strategy or there's a way we used to see it is that we count four. No, let me not do that. We count four candles, but let me not do that. It's not healthy to do that now. Okay. So you can see, I'm back happy. I'm not sad again, man. I see that price is what is continuing the uptrend. Well, that's not our focus. This is going to be one of the sessions where you guys won't like because it's boring. but the boring sessions are the ones that have all the source. But keep that in mind. So yes, it got to the 50% level. What did it do? It went further down. Now this is where we term it as a discounted price, because price is below the equilibrium level. Now, when price gets to the equilibrium level, that's what we call fair valuation. It means buyers and sellers in that particular price swing have gotten the chance to participate in the market equally. You understand? So there's nothing like buy, and then there is no sellers in the market. And there's no sign that sellers got a fair share of what? A fair share of the uh, how do they call it, movement in price. You understand? It went up, went up, came down, came down, got to the 50% level and pierced below it. Now at this point we consider price what? Oh my god, oh my god, I don't like inconveniences at all. So now it got to the uh, discounted level. This is what we call discounted level. You understand? The middle of this level is what we call optimal trade entry. But as as time as time went on, we refined what optimal trade entry means. Now optimal trade entry means to us this whole level from the 60 to the what, to the 79. Now in cases where it gets to the 70, I'm a bit distracted because some people are entering the house who are not residents of the house. So yeah, I don't want them to ask me. I'm giving them straight face. Don't come and ask me question because I won't answer you. I'm busy. So at points where price gets to the 79 level is what? It's considered deep discount. You understand? From this point, from the 79 level to below that 70.9 level is what? 70. Forgive me. If you are watching this and then you are distracted because I'm distracted, forgive me. Let me catch my thoughts. Okay. So when price gets to this 79% level and goes below it, that's what we consider as what? As a deep discount. Over here is just discount, but here, below here is a deep discount. Most times when it comes below here, it it's a sign that price wants to go continue going lower, because if it is really bullish, it should not spend much time below the 50% level. Understand what I'm trying to say? Okay. So we retraced. I'm teaching you ways you can get a trade, by the way. So we retraced and then came to the order block at the 50% level. You understand? You can see that the price left an order block over here at the 50% level. If you don't understand what order block is, you go back to the teaching I did. You go back to the elements of a trade setup. Go back to the elements of a trade setup and watch it and understand. Okay. So now price came all the way here and then started showing signs of what? Wanting to go up. It took the chance to what? To expand higher. Again, from consolidation to what? To expansion. After expansion, what? Retracement. You see, over here too, because we are expecting bullish price movements. It came here, reacted at the 50% level. You can see a lot of price action over here. After the 50%, it came back into what? Into a discount situation. Came back into a discount situation and then started going up again. Understand? It expanded higher. This time, notice it didn't come all the way down. Why? Because that's already done that here. That's already done that here. It doesn't have to come down again. Come down to 50% level. You understand? That's already done that here. That's already done that here. It doesn't have to come down again. What does it do from here on? From here on, it starts looking for fair value gaps. It doesn't look for order blocks. Start looking for fair value gaps. Enters the fair value gap and then higher. Then consolidation again. You understand? So price, what you should focus on is that price moves from it interchanges it's interchanged through four contexts. You understand? Consolidation, expansion, retracement, and reversal. Now, I'm not going to talk about the IPDA again. What I'm going to do is to show you more examples. So here is it. This is the first example. Consolidation. Oh, consolidation, expansion. Mhm. Consolidation, 50 level, expansion, retracement, boom, higher. Let's not just check bullish scenarios. Let's check bearish scenarios. Now, because this was not, you can see that over here, price did not return to the bullish order block. Exactly. Because, let me explain why that is. Because the underlying bias of price was not, sorry, price didn't return to the bearish order block. This is the bearish order block because the underlying bias was not, the underlying bias was not sell. It was a buy underlying bias. You understand? And the foundation bias used to build this particular trade was not a sell. It was a buy. You understand? So here, down, consolidation again, down, reverse, up. You understand? But this is a sell scenario consolidation. You understand? A consolidated and then expanded. You understand? So every day after consolidation, that's what it expands. Sometimes the expansion means it's going to continue expanding. Sometimes the expansion means it's a reversal. It can take out these lows, just as it took out these lows. Look at it took out these lows. Boom. It's too accurate. Boom. It tapped into this order block and what started going out. So now let's examine this. Small consolidation, expansion. Did they retrace into that level yet? No. Went up, 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 up. By the way, this took a great deal of time to wait for this trade. It took a great deal of time, but it eventually came back down to that level. Up, 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 up. Started coming down, 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 down. Came back to this level. You can see the order block at the 50% level. That's the equilibrium. You can see it. So at the tip of it, you put your stop loss over here, and then what? Price goes up. You understand? Let's look for another equilibrium or consolidation. Consolidation at around the 50% level. You can see the order block. Price didn't come all the way to tap the order block. Now, I think a situation like this is what most people were asking me. Okay, so seeing this, let's examine the higher time frame. Okay, there's no other block over there. Let's go to the 2 hour time frame. Sheesh, there was some other block here, but price didn't return all the way here. But if you continue going on lower time frames, this alone tells me that this small uh, this small retracement or this small exhaustion, the exhaustion is the word I was looking. This small exhaustion tells me that there is a other block on the lower time frame. So came all the way here. You understand? The reason why price didn't come all the way to the other block is that You can see over here. Well, okay, it didn't come all the way to this other block too. Didn't come all the way to this other block too, but it went up. But you can see over here, other block had the other block over here had been mitigated. You can see that, right? So most times when it happens like this, it doesn't come all the way down again. And sometimes too, that's the reason why we have stop loss. Sometimes too, you set the trade, and because you are not sure, so all this is going to take a lot of back testing and research. You would have to back test the market properly to see how many times does the market get to the order block, and how many times does it not get to the order block. And after that, you are going to also back test how many times, eh, yeah, how many times does it get to the, how many times does it not get to the other block? And then also when it gets to the other block, what does it look like? When it does not get to the other block, what does it look like? If you had backtested that, let me use myself. If I had backtested that properly, I would have known exactly why it's not going to come all the way here. You understand? And then I did. So I know exactly why. What is the reason? We can see that over here, there's an order block here. It had mitigated this order block. You understand? The order block is basically the last bearish candle you see before an impulsive up move. You understand? So this is the last bearish candle before an impulsive up move. If you go on the lower time frame, this small thing over here is a consolidation. Price is fractal, so anything you see on the higher time frame is on the lower time frame as well. So consolidation, expansion, retracement, per order block upwards. So now when it was coming back, it didn't have to come all the way here. If you go on the lower time frames, you will see that there's an order block over here. You understand? If you go on the lower time frame, you see that. Let's look for more serious scenarios. Okay, my trade is hmm, let's look at this level. Uh-huh. So it's either at this level, at this level, okay, yes. So at this level, price didn't come all the way to this other block. Now I'll show you why. What is it? Is someone calling my phone? Why is it? I'm not supposed to be facing exactly. Someone is Ubia me 7 missed calls. You see, who is this? What is that? Ah, what is that? Masa, don't come and interrupt my listing for me. Okay, at this point, I don't think anyone is going to join. People are probably doing their NSS and all these things, so I'll end it. 229. Yeah. Forty-nine. This news will come out next. Yeah. So yeah, let me explain why price didn't come all the way down here. Consolidation, expansion, retracement didn't come all the way to the order block. Fine. But went up, came down again. Now this consolidation. I mentioned earlier that price, that's what consolidates, expands, retrace, and then can from there can do anything again. It can expand again. You understand? It can consolidate and then continue an expansion. You understand? So these levels we circle them for the long term. Understand? Because the concepts we know they are valid. They are valid. By all means, they are valid. So here we circle them for the long term what? This is part of the long term expansion on a higher time frame, like the weekly. I always calling me. It's a number save, it's not even a number I've stored, so I'm not even bothered. You see, something like this. Let's see if price reacted off of the 50 level. These things are too accurate. You can see the 50 level. So what do we circle here for? We circle here for the long term continuous buys. You understand? So here for the long term. You understand? So all depends on the time frame you are looking at and then the underlying bias. Underlying bias you are looking at the market with. You understand? Let's check another pair before I quit. By the way, I think this is one of the teachings where I'm not going to perform well because I'm facing harsh conditions here. As I'm talking, someone is playing music, or you will not even understand the, the level of importance this is to me if I try to explain it to him. So I'm not even waste time. I just focus on what I have to do and then dash from here. That's all. You don't spend time with time wasters. It's something you should be cautious of. People who waste your time, don't spend time with them. People who say things, whatever, they just open their mouth back, and start saying things about you. Don't waste their time on them. Don't waste your time on them. Sorry. So here, expansion, consolidation, expansion, retracement, order block at or near the 50% level, order block upwards. It came back down again to visit this one upwards. So it's still it also depends on the pair you are watching. You understand? Let's check this one out too. Consolidation, expansion, retracement. What do you see here? When price retraced all the way to this place, to the order block, what do you see? You see a reaction. You can use this one to scout some pips. 278 pips. You can stop at 200. You understand? My throat is very dry. I don't have any water here, so I'll be closing soon. It's calling me. Child, the phone is on D&D, so they are banging the thing. Who. Guy, I can't answer now. I'm busy. Don't know who it is, but I'm busy. Mm, the highest, no, not the highest. It's a higher time frame. Consolidation, consolidation, expansion. Did they come here in the short run? No. Down, 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 down. So came to take out this low, created a low, swing upwards. Where do you see it come back to? The consolidation way at or near the 50% level. You see, and what happened? Down. So um if you go back to watch this, which I don't think people are going to go back to because I've come to realize that people can just talk with their mouth, but they are not really serious about what they are saying. A lot of people have approached me to talk about, oh, this one, when can we start trading? When can you teach me how to trade? And then I say anytime. And they say, okay. And they never contact me again. You are not serious as you think you are, or as your mind makes you think you are. If you are serious, you'll be coming. So yeah, I'll upload this video right away. I'll not wait for evening. I'll upload it right away. And then if you go back to this video and then you watch it, what I'm expecting you to do is to go into your chat, be patient, don't rush it. You go into your chat, be patient, don't rush it. You go into your chat, be patient, don't rush it. You go into your chat, be patient, don't rush it. You go into your chat, be patient, don't rush it. You go into your chat, be patient, don't rush it, and look for scenarios like what I've taught you here. You look for consolidations, and then you measure your fib. You measure it with the fib. Look at the 50% level or around it, and then you look for the other block over there, and then you wait for price to revisit that level. You understand? Also, if you want to do this on the lower time frame, there are ways you can do it, but before you do it on the lower time frame, make sure you have an underlying premise or underlying bias where you think the market is going to go to before you do something like this. You understand? The reason is that you can't just go to any time frame and then anchor your fib on it and say, okay, consolidation, blah, blah, blah. I'm waiting for price to get to this level so that I take my trade. No, you have to have an underlying bias. The reason for underlying bias is that so that when price gets to that level, you immediately start seeing what? You immediately start seeing quick reactions off of that level. You understand? The reason is that if price is truly bullish, if it gets to that level that we've marked out, we should start seeing a reaction immediately gets to that level. If you don't see a reaction, if you continue see piercing through that level, then it means our underlying bias is faulty. You understand? So go back to your chart. I think, take like 3 months of price data and then go through it, just keep looking for consolidation, expansion, retracement, expansion again, or consolidation, expansion, liquidity pool taking out, reversal, consolidation, expansion, retracement. It always goes from consolidation to expansion. After expansion, you can do another consolidation. You understand? So yours is to identify what price is doing currently and then what to move with that flow. If you know what you are about in the market, no situation will make you panic. You understand? No situation will make you panic. And by the way, we've hit all the levels that we forecasted during the weekly forecast. So no need to feel any way about price. Okay, now price is red. That means this. Wow, it has entered. Wow, wow, wow. It has hit my stop loss. It has hit my stop loss. It has hit my stop loss. Yes, it has hit my stop loss. It has hit my stop loss. Minus $23. So yes, it has hit my stop loss. Um, ahead of, wow, should have been wiser. Should have evacuated a trade before. Like I think immediately went back to take out that high. So yeah, go back to the chart, look for something like this. You see something like this. Consolidation, boom, expansion, order block, retracement, and you can see a sharp reaction at that level, you understand? So yeah, you can use this to scout in any direction, but make sure you have an underlying bias. Right now, I believe price is going to continue going upwards. But for the level it is at now, we can use this order block to do what? To take a scout trade, you understand? So yeah, this will be the end of our session, and then I hope to see you guys on the next session. Bye. Stop recording.